Hi, it's Larry Gaines, Power Cycle Trading. Well, the broad markets, as you know, have had a great move to the upside, and to some extent are a little bit overextended. So, you know, it pays to be cautious in this type of market when you've had a big move up and you've been trending sideways. So, what I like to do is put together a list of potential trade candidates that are good for either short or long in this type of market. So, today we had our Q&A for our members, trading members club that we have, and a couple trades that we looked at. First was CREE, C-R-E-E, as a potential short setup. So you can see here this is a weekly time frame. You can see the momentum indicators that we use. Cycle 1, Cycle 2 have started to shift to the downside below zero. You can see the last time we had a shift down here, we had a really good sell-off, it got up to the 21 EMA, failed, had a big move from 59.01 down to a low of 44.90. So if you look at this, you know, current indicators are showing on a weekly time frame that the market's, you know, rolled over. Now you're extended from the moving averages. So one way to do this trade is you want to be positioned where you define your risk and give yourself enough time in case you do see a retracement back up into the moving averages. So taking the measured move from this point A to point B to see what the potential is for a downside move, then what we can do is measure that same distance from here to here, and we put it in at the prior swing high right here, and we get targets. So the first target was the 382 right there at 45.89. It's moved through that. So the second target, now we're down at the monthly low. Next target is right here. This is the 50% retracement level. Let's see, hold on. And then you have the 100% of this move down here to 36.27. So what you're seeing here, it's right into its 50%, percent of that move from this point A to B right here. So this will be the 618, so that comes in at about 42 and then down to 36. Now if you take this and look at a monthly time frame, very macro, you can see that we're at a very key level here for CREE. Let me pull this back up. You can see this low right here, this pivot low. This comes in right at about 44.88, right about where we are, you know, breaking that. So this is support level that's currently breaking, and then if it goes and breaks through that level and extends down, the next major support comes in right about here where it broke to the upside. Now this is on a monthly chart, so this is around 35. So it has potential. Now the thing that you need to do is give yourself time. So one of the trades that we put on today was going out to the 31 days out and doing the 44 put 38.5 put spread. It was going for about $1.30, $1.31. So that would put you at the money, buying your puts and then selling below to finance and to hedge yourself the 38.5 puts down here. So this is a way to take advantage of a potential move to the downside while also minimizing your risk, reducing your cost, and hedging yourself for theta decay. The other thing I liked about this trade setup is that we broke a weekly trend line right here. So the it looks good for potential move at least to maybe down here to 41.5, which is the 618 retracement, and possibly even lower if we get some momentum. It'd be an even better trade if you get a sell-off in the broad markets, because then that would really give yourself a boost and have the trend behind you as far as wind at your back with the broad markets falling. So that's one trade idea. So here's a quick shot of the trade setup that we did this morning. It was buying the 44. This is 31 days to expiration. Buying the 44, selling the 38.5. There are different combinations you can do, but this was a trade. It was $1.30, $1.31 this morning. Now it's $1.53. So that's a short idea. Now the long idea is FSLR for solar. It just triggered out of a weekly squeeze. Our indicators are positive, so this is a long-term time frame. Now the problem right now, you're also in a daily squeeze, so that looks good. But you know, today we had the market pull back real hard, so we've had FSLR pull back into the 8 EMA. So what you want to do is watch this as it pulls back. If it gets back to the 21 EMA here, this would be an excellent position to look at initiating a trade, but you want to make sure you do it with your smaller time frames, like a 60-minute, setting up for a trigger, preferably out of a squeeze. So this particular trade, having it, you know, in a long-term squeeze which just triggered, the trade setups and ideas that we were looking at for this was to go out to October, the October monthly, about 45 days out, and look at buying 20 delta or 30 delta. So this trade was looking for FSLR to go out 45 days or even further out, because it's a weekly squeeze, buys you plenty of time, and looking at something that is, you know, preferably around 80 cents. These trades were going for about 80 cents this morning. They pushed it up into the close, but looking at like the 80-81 strike, and those were going for about 80-85 cents. So something like that on a pullback is something that we're looking at, and basically because of this being in a squeeze. Basic setup is because it's triggered out of a weekly, and then it's in the squeeze on a different time frames. But with the market pulling back, you want to wait for this thing to bottom, preferably going into watching it closely on the daily as it moves into, if it moves further down to the 15 or 20 EMA in here. So hope that helps, and talk to you on the next video.